Morning. How are we all doing? I'm talking, Dan. What are you talking about? I think you're losing your hearing. All right. So, trade tariff concerns again? Amazing. Anyway, up and down, up and down. Markets have come off the lows. They were down. The Dow was down last night, right around there. It was about 300 or so, and it bounced off. So, the way I see this shaping up here, my thoughts anyway, as I look at where we are here and this initial recovery, a couple of things. Looking at the daily chart, ignoring any type of outside influences, the TV, the news, this is perfectly normal, what's going on here. This little pullback, this price action here on the daily chart, nice move up off of the low, little congestion here, topping tail. I don't know where today's going to end. Let's just say it ends with a relatively neutral kind of a candle. Maybe it looks just like this. I don't know. We'll see. Could be green, could be a big red one. Big red one could mean something else, but I wouldn't be totally convinced of that. It depends on how big it got, of course. If it was down here, it'd be a lot more convincing than if the low held where it is here. So looking at this intraday trading here, overnight trading, question is whether it breaks below here and heads down to the next level. And that level, as I put the red line there, it should be green, right? It could stop right there. When you've got multiple reference points that are relatively close together, who knows which one they're going to stop at. That being said, this move down overnight already tested the top of that level. And stopping at the top of a congestion is obviously more bullish than going down to the bottom of the congestion, because buyers stepped up at the first reference point. As it started to break last night, there was no reference point. This type of a move is, leaves no real support. It's a void. Now, as it went sideways here, the breakout failure created the shock, and then down she went. But buyers were bidding here at the top of this congestion, and now it's retested, and so far it's holding. We've got a larger red bar here that occurred a little while ago, and we'll see which way this goes at the open. And then, of course, where it ends up at the end of the day. If it can get through, now it's created the little double top here. We've got this little trading range. So which way is it going to go, up or down? It's really hard to tell because we've got a bottom here with a bullish move up, which suggests that after consolidation, it could go higher. But, overall, we've got a wide, whippy trading range, right? Deep retracement down, bottoming tails, red bars ignored, potent reversal, wide range bar up into here, and now the stall. Perfectly normal. My takeaway from this is probably in that unless something happens to change what's going on right now, it's more or less stand aside and manage what you have, day trades. As far as spreads go, maybe we find something, but at the end of the day, yesterday, it wasn't finding anything. So we'll see. S&Ps, obviously different picture. Intraday doesn't look much different, does it? But, this moved all the way up to the top of that area, and it looks like a little peak above it. So it's kind of pulled in, perfectly normal after a move like that into resistance. So again, nothing has really broken the bias of this move up. And maybe another day or two of consolidation. The president's over in Europe. Who knows what will happen there? Whatever they said. What did I read this morning? Came across the screen. Something about blistering comments, Okay, no big deal. So we'll see, who knows what happens over there. It can move the market in either direction. But ignoring that and looking at the chart here, what it's supposed to do here is consolidate for a while and then go higher. So again, same conclusion as far as market goes in this kind of a pattern. Really not much to go on. More of a sit on the sidelines unless you're a day trader trading the market. And Qs didn't quite get as far as the S&Ps, but pushed up into resistance, obvious place where some sellers were going to be. I mentioned the idea of a call spread up here in the Qs when it started to break, which was actually on the 5-minute chart. We can look at that later on, whatever. But you know what I was looking at, and it was a wider stop. And I explained why yesterday. And now, the Qs are coming in, and they're probably going to chop around. And over the next several days, probably, we'll say chops around, goes nowhere. But that spread, if you put it on, is going to be worth a lot less today. Transports, not much going on there. Again, another message of different pictures starting out with, but yesterday and the day before, more messages of consolidation is likely. That's all that's going on here right now. Bonds are up a little bit. They've had this move up into resistance. They're probably not going to do much. And oil, the momentum is slowing down. It's consolidating its gain. So now it's creating some resistance. It's creating some support. We got to move this up here. Move this over here. And this is what we have going on right now. And we can move this up here. Just looking at this, there's nothing in between. Maybe we can see something on the intraday chart. And I don't think this would be much of anything if it was to start breaking below this level here. These little shelves of support after sideways price action going on this far. So looking at the time going by here versus the little time there, you'd read this as distribution if it started to break. So what is the odds of this holding? Probably pretty slim. And then you'd look at this level here around $68, which down here, that overlapping bars, or it could happen at the top right there, maybe. Anyway, if it breaks under 72, somewhere in this area, who knows where, buyers begin to step up or create some support. And we'll see. Gold, nothing but it's the first time the environment isn't right for gold, but just looking at this pattern, because it made this low with a wide range bar, which was a failure and a potent reversal, a retest here could present a short-term opportunity, even in a downtrend, since this got a bit climactic. And I would see over the next couple of days, does this retest result in another reversal? Well, some uncertainty is created, Neil, around earnings. I know we usually slow down around earnings time because you have that earnings risk, to deal with. So even though you see a pattern, like earnings are going to come out in the next day or several days, that's an unknown. So, even the best looking or worst looking chart could totally turn around. So you can't look at that chart and say, well, this is what's going to happen, and disregard those earnings, because we all know what can happen. All of a sudden something is, gapping up a huge amount or down. So yeah, it's normal to slow down. However, once the earnings are out, stocks gap, and that presents a different type of an opportunity. But as far as putting call spreads, why would we want to take that risk in front of earnings? It's kind of like, throwing the dice and hoping. You don't want to do that. Things that are moving here, obviously mostly down. You see mostly the yellow here, which is, you know, what the amount that they're down here after hours, and what's relatively active right now. And the XOP is down, oil's down a little bit, but looks pretty good. So really not a big deal there. And, you know, big deal. Facebook's down a bit, uptrend. NVIDIA, if it was gapping down under that green bar, I think that was significant, but it's not. Apple's down a couple of points. This has been lagging. I don't know if it's out of the woods yet, so to speak, after this gap up. And Twitter down a point here. 70 million fake users. That's something. Well, we'll see if the chart can repair the damage here, what happens over time. But it was looking fantastic. But news like that definitely shook the confidence of buyers, no doubt. Rightly so. And other than that, well, Bob is down a bit. I mean, things are down. Market's opening lower. And, you know, as already explained, markets are trying to hold this area sideways, and it might be another boring day. We'll have to see how things begin to shake out. But, you know, we take it day to day as it comes. And sometimes things get slow. And then as things perk up, it's like, you know, we're going to find more trading opportunities than you could possibly imagine. And those of you that have been here a little while, you see that all of a sudden we're doing nothing. And then we start a day like this, and a half hour later, we're throwing ideas at you one after the other. So as things change, we change with them. And that's how it works. That being said, Dan, it's all yours, my friend.
Fantastic. Sound check, please. Yeah, I have to start off by saying I am so happy we significantly reduced long exposure yesterday. I was taking half profits, full profits. I said we'll reload on a pullback. It made sense. And, you know, I even had some emails, people asking me, hey, can I buy this? Can I, put on new longs? And I'm like, no, are you crazy? I said, we're taking our profits into this and looking for a better entry on a pullback. Obviously didn't expect this gap, but, the daily charts were all extended, and IWM. And remember, even though we often find stocks on their own page, so to speak, which means, hey, this looks fantastic, like Dollar General yesterday. And that's even, it looks like that's showing relative strength today, gapping up. But the daily, weekly, monthly, all look fantastic. But what I refer to as the mothership, the broader market indices, and the sector, of course, was telling us just to be patient. In any event, let's do what we do every morning. Start by looking at our opens in no particular order. SBAC, we have a way out of the money put spread. It's totally fine. STX, iron condor. So this weakness is going to help us because we're short the 60, 65s. And way the heck down here, 52.5, 45. So that's fine. RCL, same. We have an iron condor, so we want it to come in. So the market weakness will help us there. Little Iggy, we sold half near the highs. And we're waiting for a pivot, and then we'll move our pivot for the back half. Little TGA, it looks like it's opening, relatively flat, whatever. But same thing there. We sold half, holding half. That looks, we're just in management mode. It was a fantastic no-brainer entry, this wide range bar out of this multi-week consolidation. YEXT, we're long stock, 1859. We're just going to manage it as posted. XLU, bear call spread for half is all. We closed out half last week. ACN. Now see, this is one where we had two positions. One is a bull put credit spread under this pivot low. So that one's totally fine. And with the broader market weakness yesterday, I just made a judgment call where we bailed on this bounce right here when I saw the other indices getting weak, and we were up at the high, and we bought this into the close at 166.10, and we were up like $1.70 just in the morning. And so I, in good conscience, can't turn a $1.70 winner into a loser. So we closed it out at a $1 gain, and it still looks fantastic, all time frames. So we'll look to reload at better prices. VIAV, we're long stock. I can't tell where it's opening, but that's fine, all time frames so far. Charlie India, out of the money, way out of the money. Bear call credit spread, the 177.5s. So we have plenty of cushion. NTAP, we tightened stop and we closed half. Our Dropbox has been a retracement problem child. Well, let me rephrase that, because it's actually not a problem child. Over the high of this bar, so on June 29, we sold an out of the money put spread, the $30 puts way the heck down here. And we profit through time decay just by calling a short-term bottom. So I did a video lesson actually yesterday saying, look, even though this thing retraced $1.66 against us, we still booked 50% of max profit yesterday. So that's just the amazing benefit of selling these credit spreads around charts, which we do so much of. But as you can see, we obviously do directionals also. The Momo, we have an out of the money put spread, the 40s, so way the heck here. So it looks like it's gapping to 44. We still have $4 of cushion. Lulu's, because of we bought this breakout, and because of the deep retracement, we legged into a covered call to lower our cost basis, and we're just in management mode there. Boeing, we covered half at over 50% of max profit yesterday, even though it looked fantastic, breaking out of this big consolidation based on support. I did that because of the broader markets. And so I tightened the stop on the back half. So we're fine there. And obviously the trade wars are going to hit these, multinational S&P 100 stocks worse. So I expected Boeing sells a lot of airplanes around the world. So of course that's going to be a natural one to get hit. Weight Watchers, so we have a bear call credit spread. Let's see, this one turned bearish engulfing before the market did, a day before. So we put on a bearish trade even with bullish markets because the chart told us to. Oh, actually, this would have been a great example to show that guy Daniel. I just did a YouTube video for him before the market. Here, I'll just tell you what the video is about real quick. So you can go to YouTube, I posted it there. He asked me, hey, Dan, my RSI is turning down and I see resistance to the left. Well, number one, I don't care about your RSI. Yes, it's short-term overbought, so any oscillator is going to tell you that, but this is not a master trader bearish pattern to short unless you're just, want to day trade it, this is a put spread candidate on a pullback. And I have no idea what resistance he's talking about. None. Look at the daily, weekly, monthly. All powerful uptrends. I mean,
Those
we
that
have
look at indicators, Dan, they will often
we,
use the indicator as resistance if something's to the left. Crazy, but they do.
wait. Say that to the left on what? I missed that.
The
You're saying that?
indicator itself. So he may be looking at the RSI that has a prior high.
I totally. You're exactly right. So
It's totally a mirage, with indicators.
that,
you know.
okay, you know what? I totally missed that in the video because since I don't use those silly things, but yeah, let me just elaborate on that and you can paint it in your mind's eye. I'm not going to get into it now, particularly since I don't even know how to put an oscillator on this darn thing. So the oscillator is going to, go up between overbought, oversold. So what Greg is saying is his short-term RSI got overbought. And if you're looking just at the RSI only, it's going to have resistance. The oscillator is at a prior high. So yes, that's exactly what he must have been talking about. But for him not to see this, he has not taken your class. I can guarantee you that. And if so, he needs to take it again. All right, where was I? HFC. We did this as a weekly buy setup, so we're just in management mode. So back to Weight Watchers, yeah, we have a bear call credit spread, the 104s, 108. And all we're doing is getting paid for calling the short-term top. Almost done here. Disney, we put on an out-of-the-money put spread yesterday, the 103s. So it's, way the heck down here. We have a stop under these lows. And, look at the weekly buy setup on support. And it's just another trade to us. Finally, DRI. We had a put spread that no, I'm sorry. We still have an out-of-the-money bull put credit spread, the 105s, way the heck down here. The directional, similar to the ACN, I just took the profit because I didn't want to sit through a pullback. And that's, sometimes how the chart doesn't say get out, and that's why we have different management techniques sometimes. I don't like pain. I'd rather pay my commission, take the small change, and look for a better setup. Now, I just saw this. So let's look at some gappers now. Now, the Sun is not a gapping stock, but why am I looking at this? Never mind. I have no idea what that's about. This looks like I call them the penny stock toys. This is gap. It's a bullish gap. If this had a better clean daily and weekly, I like this pre-market setup, but it's penny stock trash. SRE. Now, this is a pro gap, bullish consolidation. Bullish weekly is fine, but now it's gapping here at 114. So it might set up as we're going to have plenty of bear call spread candidates today. So that's why, again, the guy's Humana. Sure, it could work because of the broader markets, but don't stay in that trade very long because when it reverses, in fact, I'm going to put that on my list to watch for what I said. The bull put credit spread when it sets up on a retracement. $54. This is gapping down to this lower end, but it's an ADR and it's junk. I don't like those NSA. Gapping at $30, which is way the heck down here. It's a bearish gap, but it's on support, nothing to do. I just saw a little headline about these 3 military stocks getting a $4.1 billion order from the government. So I just pull them up, see if there's anything there. The answer is no on knock. LMT, no, there's nothing there. Raytheon, nope. I think ITA, the ETF, we just nailed this bear call credit spread up here. Well, Greg, our phenomenal scanner, did for us. But this has had quite a run. So I got no interest there. Pfizer, I just saw a headline also that they're holding off on raising some prices on drugs because Trump was bashing them. But we analyzed, excuse me, in the green room on this bar. We had a lengthy discussion about out of the money put spreads and or directionals on the daily, weekly breakout. So that, nothing to do now, but that was a good discussion we had. RH. I don't know why I took this out of my dance card, but look at the weekly and daily. Now, Pat, this is not what we call a pro gap, because pro gap ignites a new move, and this is just extending the move. It's not igniting a move, but it's too big for us to trade. So we keep them on our list until they set up. Now, if we could get a bullish retest on this daily, a W pattern, this is a beautiful weekly retracement right here at 50%, then we got something there for put spread. SD. All right, so question to you all. Nothing to do here in the first minute. I'm just seeing if we have any disasters. Like I said, the gap down on RCL and STX is helping us, and we have Charlie India, bear call spread, Weight Watchers. So we actually, it's helping 4 of our positions, the gap downs. But I have a question to you all. Daily and weekly charts right here. Do you want to buy, sell, or hold? I'll give you a hint. It was in that option profit, the daily newsletter. Our daily contrarian. Give up. Greg, you're going to like this one because you got to add it to your Master Trader Technical Strategies course. He says it's breaking out from a massive triangle, and it's poised to go up 30%. What do you think about that?
Maybe what he was talking about was whatever happened a month ago, and it did go up 30%.
Today. Nope, today he's saying buy it.
Where's the stop?
He don't use stops. So this stock ran from 778 to almost 11, 30%. And now you want to buy it? It went straight up. It didn't even go up in a controlled manner like our boy Humana.
He must have good marketing, Dan.
All right, whatever.
I told you what my late father-in-law said to me many years ago when he was learning to do what he did. He was taught that, how do we say it? A good line of bullshit is worth 2 tool bags.
All right, here, let's look. We're getting buying at the open here. So no pattern on the daily whatsoever. Here's Qs, spiders. I mean, I wanted them to come down more. And then, we dropped down to our hourly chart in 15 for an entry because why? Because volatility is spiking, and you all know me. I love selling out of the money put spreads on the spiders on bullish reversals. But there's absolutely no pattern right here. So we're in total day trade mode, and or short-term bear call credit spreads. And I'm sure Greg will find us some. Fast had a earnings. It was a bullish gap, but to resistance, so absolutely nothing to do. This had earnings. It's a bearish gap, but to support, absolutely nothing to do right now, and it's, you know, trading spotty. SMPL, you know, we looked at this yesterday, so, you know, I like the weekly and monthly still, and there's no setup right now, but, you know, I like keeping an eye on them. Same with Pepsi from yesterday. That's still relative strength. If this were to close right here on the daily, what would the pattern be called? You got it. A bullish 1, 2, 3. So then I would have more confidence in going long this. Why? Because an inside daily bar on a daily chart in the upper range of yesterday's wide range pro gap bar means that my 15-minute chart has 6.5 more hours of consolidation to build a launching pad from. So I'm going to keep an eye on Pepsi. All right, looking at our opens here, see what we need to pay attention to. All right, our stop on Yext is way under here, and it's just, you know, I'm not, if the weekly were to close here, I'm not liking that. But we're just managed, nothing to do now. Momo still in support, that's fine. Lulu, nothing to do right now. Look, I put Humana in my other minder here. Look at this. This was the one we just talked about with the video. There are so many bearish patterns to focus on. I wish I put this Weight Watchers in the video to show them, because this was a no-brainer, and we love trading things where we just say it's a no-brainer. Hit the mouse. All right, Qs have a nice wide range bar on the 10-minute. Look at that. Here's my 15-minute. Wow, that's impressive. Let's look at the FANG stocks. Whoa, look at Google. Just ripped. Look at the weekly. Now this was a no-brainer put spread candidate for our weekly trader, but we just couldn't get any juice on it, was the problem. Unless you went naked, but then that takes a lot of buying power. Apple there, look how it held this gap right here. Look at that. Wow, there's somebody out there saying a bargain in this gap down. Netflix still looks fine. We took our profits on our weekly put spread because we made 89% in one day. But I'm watching this for a new setup for next week. You know, Tesla's